The Nasdaq logged its eighth straight day of gains, with the composite index logging fresh record highs. So far this quarter, the S&P 500 is already up by more than 20% and is poised for its best quarter in 40 years. However, some analysts are concerned that the sharp rally may not be sustainable. So with me to discuss the outlook for markets and the global economy is Daniel Lacalle. He is the chief economist at Tressis. Daniel, great to speak to you again. Firstly, let's just start with your assessment of the global economy and what type of recovery you're expecting.
Hi, thank you very much. If we look at the recovery so far in the majority of economies, it is quite less exciting than what many expected. So what we can certainly rule out is the concept of a V-shaped recovery. I think it's also very uneven. We see that the recovery is quite rapid in those areas that have to do with government spending and the areas that have to do, obviously, with consumption, because it was such a massive slump that from zero, just the base effect, it works, no? But if we look at the outlook for 2021, what we believe is that there will be more of an L-shaped type of recovery. We'll see that after the base effect impact of May, June, July, that the level of growth, particularly in capital expenditure and gross capital formation, job creation, and consumption, will be quite subdued. I think that in general, because the impact on employment has been so severe, it is very difficult that the recovery happens in a strong way, and it's very difficult that it happens with higher productivity as well, because the output gap and the level of balance sheet destruction that so many companies have seen will likely also postpone many of the high productivity investments that were projected for the next 2 years.
Yeah, I mean, we've seen these massive fiscal and monetary stimulus programs throughout the world to try and combat some of the negative effects from COVID-19 and the impact on the economy. Obviously, one of the impacts of that is a massive rise in debt. What's going to be the impact of those rising debt levels?
Well, massive increases in debt, generally, what they do is that they make that the recovery is slower, and that because productivity growth is also slower, real wages don't go up as much. So what we have seen in the past recoveries since the late 90s is that every time that the economy comes back from a crisis, it comes back slower, and it also comes back more indebted. In general, the idea that many governments and central banks have that taking more debt is not going to have a significant impact on the economy is absolutely false. It does have a very important impact. It slows down the recovery process, and it makes it more difficult for the economies to reach the level of robust levels of improvement that so many would prefer.
When you look at the combination of how severely the US and Europe were hit by the coronavirus, combined with their responses, both on the fiscal and monetary side, what's your kind of overall assessment of which continent's going to fare better out of this? Do you think the US is going to come out stronger? Do you see them having a faster recovery than Europe, or is it going to be the other way around?
I believe that the United States will recover much faster than the European Union. There is obviously a demographic factor involved. Also, the fact that in the European Union, you don't have such a high level of exposure to technology in GDP and to intellectual property. Those things also reduce the level of recovery. But government spending also plays a significant factor. It is true that the Eurozone will not see the high levels of unemployment that, for example, the United States has seen, but job recovery is much faster because the subsidized scheme for jobless issues that we have seen in the European Union will likely drag for a while. So I think that the fact that the European economy is much more dependent on the banking sector that the transmission mechanism of monetary policy fundamentally helps government spending and current spending make the recovery slower. And I think that the US economy does receive a harder hit in jobs early on, but then it recovers much faster. And we have seen that in the past.
And when it comes to China and Asia more broadly, what are you expecting in terms of the recovery there? And could that be sort of sidelined or sort of faltered by a potential second outbreak, for example?
There is a risk of a second outbreak, and definitely the recovery in China has seen an L-shaped recovery in many sectors that have a lot to do with consumption, that have a lot to do with what citizens decide to spend out of disposable income. In the case of Asia, what we see is that there will be a much smaller hit from the pandemic. We have economies, for example, like South Korea, that may see only a very modest cut in GDP growth in 2020, about 1%, and that will recover very, very quickly afterwards. But it is true that if there's a second wave of COVID-19 concerns, then those estimates are going to be shaved. And I think that in any case, Asia is one of the regions that comes with a lesser impact because they were better prepared, because they took harder, stronger measures to prevent the pandemic. And also the recovery is going to be much stronger than that of the Eurozone, certainly.
And what do you think the chances are of us finding a vaccine? And what will that mean for markets, sort of the thought process behind potentially finding one, and also if we then did find one, presumably that would be very bullish for markets.
Well, certainly markets are discounting that if it's not a vaccine, at least what we will have is a good treatment or a good set of treatments that make the COVID-19 risk lower. It is very difficult to bet on a vaccine for a very simple reason. There is no vaccine for humans of any of the previous COVIDs. So that is something that should at least make us be less optimistic. However, there is a very high likelihood of good treatments that reduce mortality significantly. I think that is something that markets are already anticipating. That is why even with the risk of outbreaks, what we see is that the general perception is that governments will not go down the aggressive route of basically just shutting down the economy entirely. I think that is not going to happen. But if there was a vaccine, very bullish for markets. If there is a treatment, also significantly bullish. I think that in any case, markets probably have discounted already a significant proportion of that outcome.
Now, we know that the commodities markets took a major hit amid the pandemic. As we move to a recovery phase, where do you think the opportunities are within the complex?
If I look at commodities, the ones that I think should be looked at with some level of interest would be, I would start with copper. I think that copper is one that can see a strong bounce with an improvement of global demand and global trade and some improvement of industrial activity. That copper is one that is, its fundamentals are not very good, but as a recovery bet, it's one of the best ones. I think that obviously, I think that gold can still do very well relative, even in a bullish market, as we saw in 2019 and 2018 because of the supply-demand scenario. I would be cautious about oil because of the large amount of excess capacity that continues to exist in the market. And zinc also looks pretty good in terms of commodities.
And in terms of the FX markets, the US dollar has been interesting lately. Obviously, it was in a major bull market since the start of 2018, really, for over 2 years. And at the beginning of the year, a lot of analysts were calling for a weaker greenback. Didn't happen straight away. but now we have started to see some weakness come through. Do you expect that negativity to continue, or is this just a short-term move lower?
I think it's just a short-term move. The US dollar tends to underperform when markets get too optimistic about global growth and about the recovery, and that makes total sense. Basically, markets start to get more positive about emerging market currencies and about the euro, about an improvement in the European economy, all those things. But then things go back to reality. And I think that ultimately the fact that the rest of central banks, apart from the Fed, are undertaking much more aggressive monetary policies than the Fed itself. Fed's balance sheet is about 36% of the GDP of the United States. The Eurozone, the ECB's balance sheet is more than 47% and continues to be very aggressive. And the fact that the global shortage of US dollars remains, and we are facing a wall of maturities coming from emerging markets in US dollar denominated debt, strengthens the situation and the outlook for the greenback.
All right, and very finally, you've got a new book out, Freedom or Equality, The Key to Prosperity Through Social Capitalism. Talk to us a little bit about your new project.
Yes, this book was not written with obviously the COVID-19 crisis in mind, but interestingly enough, it addresses all these messages that we're hearing constantly throughout this crisis about the fact that some people say that governments need to take more control of the economy, that there should be massive taxes to finance the COVID-19 response, that printing money is the solution to get out of this crisis, etc. So what I give in this book is a group of arguments and information for the reader to address those messages and to counterattack those siren calls that we're hearing. And I also give solutions. It's a book about solutions, about how we can actually face the challenges coming from higher healthcare spending and more needs to invest in high productivity, and what would be the best possible solution to that. So it's a book about not just trying to debunk the myths that are trying to be sold to us these days, but also about realistic solutions.
All right, Daniel, thank you so much for your time as always.
Always a pleasure. Thank you so much.
And that was Daniel Lacalle, Chief Economist at Tressis. I'm Victoria Scholar, and thank you for watching IGTV.
For more videos like these, subscribe to our YouTube channel, IG UK, and make sure to follow us on Twitter. We're at IGTV.